What can the investors expect ahead of the Canara Robeco Mutual Fund IPO? To talk more on this, I'm joined by the MD and CEO of Canara Robeco Mutual Fund, Mr. Rajneesh Narula. Thank you for joining us on Business Today.
Thank you for having me.
Sir, I'd like to start by asking you that why IPO at this time, and what can the investors expect from an all-offer sale?
Well, I think the IPO at this stage is more to do with the evolution of the company and where it's reached. We've now finished 18 years as a joint venture. Actually, last month is when we actually completed 18 years. I think we've become an adult in a way, and the shareholders think that we are good to fly and be on our own as well. But more importantly, I think the question is more for the shareholders itself, as why Canara Bank and Oryx think it's an appropriate time. But the retail investors like me should be very excited and looking forward to this IPO, only because I personally, and I'm sure a lot of my colleagues in the company, would like to own part of this company as well. So we want to graduate from just being people who work in this company to part owners as well. So I think it's extremely exciting for all of us to be part of that journey.
And what do you think will change in the AMC once it's listed?
Well, I think we'll do more of the same, but what I know is the LODR requirements require much higher standards of reporting, transparency, and governance. So we are already a very, very compliant organization, and we look forward to making sure that that's in check. But more importantly, right now our brand is known within our fraternity, which is mainly distributors and investors in our mutual funds. It'll now be known to the larger audience and public as well who invest in the stock market. So I think that will change dramatically for our brand.
And anyway, the business is being run?
Well, the business is, as you are aware, our AUM is equity focused. 91% of our AUM is equity. We'll continue to have that focus going forward because we believe that's the right strategy for us in the marketplace. We used to be a company that used to be more dominant in fixed income when we first started off. We had over 80% of our assets in fixed income. And post the Lehman Brothers crisis and the lessons we learned from it, we did the flip and changed the business model to being equity, and within equity, more retail. So we have over 5 million investors or folios in the company, which makes us quite unique from that perspective. And we're also one of the fastest growing AMCs in the industry.
And what gives the company a competitive edge compared to the other bigger players, Nippon, HDFC?
I think what gives us a competitive edge is our focus. We are a pure play asset manager focused on the mutual fund space. We're not distracted by other options that are available like AIFs, PMS, passives or otherwise. We are purely focused on the mutual fund space, which we believe is the biggest space in our industry. So that, I think, gives us an edge.
Okay. And as you said that over 90% is in equity, don't you think it's a bit too concentrated considering the fact that markets are quite volatile right now? Do you think that will affect the investor subscription or further strategy of the mutual fund?
Well, I don't believe it is concentrated from that perspective because to me, downturns in markets are generally notional losses for an investor unless they actually redeem. So they have the opportunity to recoup once the markets rebound. And that's always been our message to the markets as well, is understand before investing, but more importantly, stay invested. So for us, we look at more long-term investments.
And how do you plan to manage the risk since it's a volatile space right now?
Well, we obviously would be more looking at strategies that protect the downside risk for investors to make sure those investments are in companies that handle this kind of environment much better. Sometimes you may look at a cash level being a little bit more in the funds. That could be the other strategy. But more importantly, is stay invested and have conviction in the stocks that you've invested in.
The AUM of the company has grown really well in the past 1 year. Equity AUM, let alone, has, I think, grown by 39%. What do you think have been the reasons for this, and how do you think that you will be able to sustain this growth going ahead?
The main contributor to our strong growth has been basically performance of our funds. The performance of funds are led by a very strong research team that we have and extremely good fund managers that manage this money. And again, it's focus. It's basically doing the same thing over and over again and learning from whatever you you see in the marketplace. But performance, making sure there are great risk management systems and tools in place, those are the two things that I would put it down to.
And as you said that you are, an active fund, skewed towards that. But there's a lot of opportunities, a lot of AMCs these days see in passives. Do you think going ahead, the focus will still be on active, or there could be places where you could see passive as well, as you have few strategies in passives also?
Well, globally, you can see that passive strategies are quite dominant as well, in some countries in particular. In India, it's quite a recent trend. We do expect the trend to pick up going forward. We keep evaluating whether or not those are good strategies for us to look into. But as of now, we want to be an active fund house, stay focused on what we do best. So we currently are an active fund manager.
And lastly, I think distribution is the key for any AMC. So do you plan to expand in tier 2, tier 3 or the B30 locations? And what are your future expansion plans on that?
We already have a pan-India presence. We have offices in over 50 locations. But we also have the benefit of our sponsor, a Canara Bank, that has close to 10,000 branches. So a huge footprint is available for us to reach out to various corners of the country. In B30 in particular, which is an important segment for us.
A growing segment now.
Absolutely. And it is a segment where we get more than a disproportionate share of our AUM from there as compared to our peers. Over 24% of our AUM comes from a B30 as compared to 18% for the industry. So we are quite dominant in those markets, and we continue to see that to grow as we move forward as well and penetrate more there.
All right. Any last word for the investors at this time when markets are volatile, and how can they manage their portfolios?
Well, my personal desire is basically for them to stay invested for the long term, stay invested. And I believe this is a great investment to make in our company in terms of the IPO. And hopefully they will hold it for generations. That's my desire and belief.
Thank you so much. Thank you for talking to Business Today.
Thank you.